Yo, what's up guys? It's your boy Looney, and today I want to show you the one chart that completely changed how I see the market, especially after the volatility we just went through this week with Trump and China back in the headlines. Because if you've watched the market these past few days, you've probably felt it. You saw the red candles, fear spiking, and headlines about tariffs, and just overall everyone wondering if this was the start of another crash. But when you zoom out, the entire drop looks like a tiny blip. And that's exactly why this chart changed everything for me. Before we dive in, quick shout out to the Discord. It is free to join. And if you want my premium access with trade callouts, one-on-one coaching, giveaways, and my full option selling course, it's only $8 a month. All the links are in the description. So what is the chart that changed everything? And the chart that flipped my mindset is actually the S&P 500, and I have the SPY. You can look at the SPX, same idea. And I looked at its growth curve. And when you look at it over the decades, 30, 40, even 70 years, you notice something incredible. No matter the headlines, trade wars, recessions, elections, or pandemics, the market always recovers. Now, yes, it doesn't move in a straight line, and I'm going to get into why that actually creates opportunity and how you can actually benefit when there are dips. But if we look at it, it's more like a staircase of compounding wealth. And even with what happened this week with tariffs, fear, sell-offs, margins, leverage being involved, it barely registers when you zoom out. If we look at the weekly chart, we saw some red, especially on that Friday, but we quickly saw a recovery. And if we even zoom out to the max dates, we could see it's not even apparent on the chart. And yes, quickly, the S&P 500 has returned about 10% per year, meaning if you put 10% or $10,000 now and waited 30 years, you would have $200,000 just by staying consistent. Now, yes, you're not going to get that 10% every year. There are some bad years, there are some good years, but it is worth noting that the mean average is 10%. Now, why did this chart actually give me a mindset shift? And it taught me something very simple. And that is investing isn't about timing the market. It's about time in the market. And we just saw everyone panic over the Trump-China headlines. And yes, volatility did spike. And if we look at the VIX, it jumped almost 30% in just one day. And if we look back at the history, this is one of the top spikes in history with the VIX. And if we notice with these spikes, they do eventually fade as well. Most of the time, we are trading in the price range where there's not much volatility. So actually, every red day, every crash headline looks huge in the moment, but when you zoom out, they're just tiny dips in a long-term upward trend. And that's why I don't panic anymore. I don't chase green candles. I actually use this panic as a guide and not a reason to sell everything. So what am I personally doing right now with some sort of situation like this? Because we saw some volatility to the downside and also to the upside, because if you don't know, Trump actually announced something along the lines with they're going to actually create cooking oil in the US, and a company like this, SDOT, has absolutely soared up 100% in just a few hours, just from him simply talking about it. And not only can volatility work to the downside, it can actually work to the upside as well. And with this, in this position, I'm not going to FOMO in. I'm not going to be in a feeling where it can only go up, and I'm simply just staying away. It is very euphoric. This company specific is very euphoric. Can it go higher? Yes. But I'd rather not risk it and have a situation where I lose almost 90% of all my gains. Instead, I want to stay invested with what I got and also not get shaken out. Because when volatility and fear rise, like we just saw, I buy a very small amount. So I'll buy dollar cost average amounts. I'll do crypto as well. Now this one's a little bit more risky assets, but it is something that I do on the daily. Something like Bitcoin, I am buying $3 a day every day. Not only am I doing that, but I'm also selling options. I'm selling puts on stocks I want to own. So let's actually look at something like Webull, because Webull has been seeing a lot of downtrend, and a lot of people would get shaken out by seeing this chart. And me myself, I actually thrive on the fear, and I see it as an opportunity. And that's why I'm selling puts. I have $12 put and I have a $10 put. Now, if the stock drops to 12, which it already is, I'll get assigned, and I could actually dollar cost average with options and sell even lower strike prices, which is what I'm doing. And if it continues to do this, I will continue to dollar cost average with selling options and maybe just buying shares or changing up the strategy and buying call options. But I'm very reactive and overall not concerned of where the stock trades short term. So, but when the market's more calm and overall euphoric, like we might see pretty soon, because we quickly saw another recovery, this is when I hold a little bit more cash. And I have about $13,000 in cash. I have some margin as well. And most of my cash is in options right now, with selling options, a lot safer alternative. I do have some debit spreads as well. So I do mix in those with just a little bit. I don't do that much, but I will sprinkle in some buying option strategies or just spreads in general. But if you notice all throughout it, no matter if we're seeing the highs, the lows, I stay invested, because compounding only works if you give it time. And I did this week. I didn't go all in, but I did deploy some capital where the fear index was high. And we can see already the market has almost recovered completely. My portfolio is still down 1%, but if I sold down here, I would be down 10%. I was down 10% at one point, and now we are seeing it climb up 8% since that drawdown. So doing this actually paid off, and we could see that it already paid off. But why do most people miss this? Because most traders don't truly notice this chart. They just see the noise, the short-term noise. They chase momentum when the market's green, and they sell when it turns red. But the real edge is understanding that volatility is the cost of admission for long-term gains. If you could stomach the red days, you actually earn the compounding over years. So the next time headlines like trade war or tariffs hit your feed, don't react emotionally. Pull up the long-term S&P 500 chart just to remind you of, and just remember that the market has survived almost every single crisis, recovered every single time, and rewarded the people who stayed invested and consistent. Because this one chart and this one perspective changed how I see the market forever. Until next time, peace.